Welcome back, guys. We are doing cash budgets, and this is 18th question. You can come to this 18th question where you are given the information like from the following forecasts of income and expenditure. You are asked to prepare a budget for the months of January to April. And now the question here is, you are being given information from November, December also. November and December information is also being given. So let us see what we have to do with that. Sales is completely on credit basis. Purchases is completely on credit basis. That means when you sell goods on credit basis, you don't get immediate cash. When you purchase goods on credit basis, you don't pay immediate cash. It depends on the terms and conditions. We have wages, manufacturing, admin and selling expenses, all are payments. Going to the next document, the continuation of that question says, the customers are allowed a credit period of 2 months. So customers are given 2 months time to pay. That means if I'm selling in January, I will be getting money not in Jan, not in February, I'll be getting money in March. So 2 months is the time period given. Dividend of 10,000 is payable in April. So only in April we are going to take that. Capital expenditure to be incurred, plant to be purchased on 15th January for 5,000. So you have to show only in the January month for 5,000 rupees as payment. And on March 1st, they are purchasing a building and a monthly installment of 2,000 to be paid. So monthly installment means your monthly installment will be 2,000. You're going to pay from March onwards. So March you will show 2,000 payment. April you will show 2,000 payment. That's all because we are preparing only till April. Creditors are allowing a credit of 2 months. So creditor is also giving 2 months time to us. That means if I'm purchasing goods today, I will in this month, I will not pay in this month or next month, I'll pay it in the 3rd month. Wages are paid on the 1st of next month. So whether it is 1st of next month or 10th of next month, it is 1 month lag. Lag in payment of other expenses 1 month. Lag means delay. So delay in payment of other expenses is also 1 month. Balance of cash in hand is given as on January 1st, 2000 is 15,000. So we'll go ahead with preparing the cash budget. Question number 18. Cash budget. So how many months is asking us to do it? Four months. So it is January, February, March, and April. All right. This is particulars. We start with the first one is opening balance. If you see the last point of the question, it says 15,000 is there on January 1st. 15,000 other months is what we have to find out. Then we will be talking about receipts. In receipts, I'm talking about collections from collections from customers. You say that you are giving 2 months time to your customers. So that means I will write 2 months old sales. So for January, 2 months old. For January, 2 months old is November. So go to November sales. November sales is 30,000. I'll receive in January. For February, 2 months old is December. So December's sales is 35,000. I write it here. For March, 2 months old is January. So go to January sales. It is 25,000 that I'll receive in March. For April, 2 months old is February. February sales is 30,000. That 30,000 I'll receive in April because we are giving 2 months time to our customers. Then I think that is the only receipt we have. Then we start with your payments. In payments, let us start with payment to creditors. Credit purchase payments. Creditors are also giving us 2 months time. That is point number 4 says that. So for January, 2 months old is November. So it is 15,000 I purchased. So I'll write here 15,000. For February, 2 months old means December. December purchase is 20,000. I'll pay 20,000 in February. For March, it is January. January purchase is 15,000. I'll pay it in March. For April, 2 months old is February. February purchase at 20. That will pay it in April. Then coming to the other points, first point is finished. Second point, dividend is payable in April. So I will write dividend is also 2 months old. I can write 2 months old purchases. Dividend payment only in the month of April, 10,000. So I'll straight away take nothing in Jan, Feb, March. 10,000 only in the month of April. Capital expenditure, plant to be purchased in January 15th. So you're purchasing a plant on January 15th for 5,000. And again, you're purchasing building. Building is purchased on installment basis. So your installment starts in March. So every month you're planning to pay 2,000. So from March onwards, you'll pay 2,000. So 2,000 in March, 2,000 in April. So first point, second point, third point over. Fourth point is finished. Wages are paid on the 1st of next month. Wages, it is 1 month old. Because you're saying 1st of next month, so 1 month old. So for January, 1 month old is December. So December wages is 3,200. I'll write here. For February, I'll see January wages, that is 2,500. For March, I'll look for February wages. February wages are 3,000. And for April, I'll see for March wages, and March wages are 2,400. Lag in payment of other expenses also 1 month. So what are the other expenses we have? Manufacturing expenses. We have administration expenses. We have selling expenses. So for January, I will be referring to December expenses. December expenses are 1,250. Sorry, it is 1,225. 1,225. 1,040 and 550. All right. Then for February, I would look for January's figures. It is 990, 1,100, 600. For March, 1 month before means February figures are 1,050, 1,150. 620, and here it is 1,200, 1,180, 710. Okay, this is all about the question. That's all. So I take here opening balance plus receipts and take here payments. There I will get closing balance. Closing balance. Closing balance, you know, it is opening balance plus receipts minus payments. So A plus B minus C is D, or 1 plus 2 minus 3 is equal to 4. So let us just calculate these figures. $15 plus 3, 45,000 is this. This total is coming to 26,015. So this 2 is 45, this total is 26. So this minus this gives you 18,985. 18,985. This will go here as opening balance. So 18,985. Then again this total is coming to 53,985. This total is coming to 25,190. So this minus this is giving us 28,795. So this will again be going here. So 28,795 plus 25, total is 53,795. This total is coming to 22,820. This balance will go to the next month as opening balance. Sorry, not this one. We have to deduct 53 minus 22 gives us 30,975. This 30,975 goes here. And I can take the total 69,75, and this total is coming to 37,290. Difference of this two is coming to 23,685. These are the closing balances of those 4 months. Okay, so opening balance 15,000 was given. Receipts, collections from debtors, we have taken 2 months old sales, because whatever you have sold in November, you are receiving January. December sales you received in February. January sales you received in March. February sales you received in April. Same with purchases, 2 months old purchases, payment is made now. So November's purchases are paid in January. December purchases are paid in February. January purchases are paid in March. February purchases are paid in April. There was a dividend to be paid only in the month of April, so we have taken it. Plant was purchased in January, so we've taken only in January. Building was purchased on installment to be paid from March onwards, that is March, April, and so on. It goes every month from there. Wages and other expenses are paid 1 month delay, so it is 1 month old, 1 month old, 1 month old. That means previous month's data. For these are figures for which are expense of December, which are paid in January. January expenses are paid in February. February expenses are paid in March. March expenses are paid in April. That's all about your question number 18. Then we'll continue with your question number 19. Come to question number 19. Now, when you look at this question number 19, you have been given information regarding sales, purchases, and wages. National Products Limited wants to approach its bankers for temporary overdraft facility. Now, this is one point I wanted to cover today. See, what is the purpose of preparing a cash budget is not just to know the closing balances, but also to understand whether we have sufficient cash balances to run the business or not. So if your receipts are more than payments, then you will be having some surplus cash. But suppose if your payments are more than your receipts, then you'll not be able to make your payments. In that case, based on this projected figures or budgeted cash budget, you will approach the banker and tell them that this is what we are having a plan to pay this much. So we need an overdraft facility. What do you mean by an overdraft facility? Where we take a temporary loan, short-term loan from the bank, right? So they wanted to know the OD facilities. The quarter beginning is from 1st October. So he's asking you to prepare for quarter, October, November, December, 3 months you have to do. But he has given information of August and September also. Sales is receipt related item, purchase and wages are payment related item. Look at additional information. One says 50% of the credit sales are realized in the month following the sales, and remaining 50% in the second month following. This is one point I need explaining this point in detail. Creditors are paid in the month following the month of purchase means 1 month old. It is very simple. Estimated cash balance is given. But before we could go for preparing the cash budget, let us do this working. So ABIT says, this is question number 19. And this is your working notes. I'm not preparing the cash budget. First, let me write the sales. what is given in the question as sales of August, September, October, November, December. August sales are 3,60,000. September sales are 3,84,000. October sales are 2,16,000. This November sales are 3,48,000. And December sales are 2,52,000. He says 50% of the credit sales are realized in the month following the sales. So if you're selling goods in August, 50% of this is going to come in September. Remaining 50% will come in this. This is how it goes. So if you sell 100 rupees in August, 50 rupees you will get after a month, another 50 rupees you will get following that. That is what exactly the question is saying. 50% of the credit sales are realized in the month following the sales, and the remaining in the second month following the sales. So let us try to break this into amounts. I would say 50% of 1 month old sales and 50% of 2 month old sales. Can I go like this? I don't know. 1 month old of August, 1 month old of 2 months old of August. September, 1 month old is 3,60,000. 3,60,000, 50% is 1,80,000. So I'll get 1,80,000 here. And 2 months old, I don't know. For October, 1 month old is this 3,84,000. Half of 3,84,000 is 192. And half of 2 months old is 1,80,000. November, 1 month old, 216. So it is 1,08,000. Half I'll get here. And 2 months old sales ka half is 1,92,000 I'll get here. December, 1 month old sales ka half, 348 comes to 174. And 2 months old ka half, 1,08,000. You can also understand it this way, like this, 3,60,000, half is 180. Half I'll get here and half I'll get here. So this is like this, like this. In this half here, half here. In this half here, half here. In this half here, another half goes like this. So I'll get August half year, September's half year, October's half year, November's half year, and half in January. So I don't want the total sales now. This is not. I want only for the months of October, November, and December. So I simply take the total of these figures and put it as my collections. So 198 plus 180, 372,000. This is 3 lakhs. This is 282,000. I hope that is clear. That's only calculation you have to understand. So I'll just write it somewhere here. 3,72,000, 3 lakhs and 2,82,000. So now I'll go for preparing the cash budget. Question number 19. Cash budget. I have to prepare it for 3 months. That is October, November, December. So I have opening balance. Then B is receipts. C is payments. And D is closing balance. All right. So opening balance estimated on 1st October is 50,000. So I write it here 50,000. Opening balance of October. Then estimated receipts. See, just now we have done the working, so you can refer back to those figures. The sales collections are 3,72,000. So collections from debtors, we got those figures as 3,72,000, 3 lakhs, and 2,82,000. Okay. Talking about payments, we have creditors. Creditors are giving us 1 month time, following month. So I'll take 1 month old. 1 month old I'll directly take. So for October, I will pay for September purchases, that is 2,88,000. November, I'll pay October purchase, that is 4,86,000. And for December, I'll pay November purchase 4,92,000. All right, this is the question. Now, there is another thing called wages. Did he say anything about wages here? He has not given any hint. So assume that I am paying in the same month. I'm taking for the same month. So same month means for October, I'll take October wages only, that is 22,000. For November, I'll take November wages only, that is 20,000. For December, I'll take December wages only, that is 30,000. All right, that's all about the question. So take the total of A plus B minus C gives you A plus B minus C gives you closing balance. So this is 4,22,000 and this is 3,10,000. So 4,22,000 minus 3,10,000 gives you 1,12,000. The closing balance for the month of October. This will become the opening balance for the month of November. So 1,12,000. So add this. This will become 4,12,000. Whereas your receipts are, your payments are 5,06,000. So 4,12,000 minus 5,06,000 gives you minus 94,000. So I'm putting this in brackets. It's negative minus 94,000. So this minus 94,000 becomes your opening balance here. So next month when you receive 2,82,000, this 94,000 gets adjusted and it will become 1,88,000. Plus and minus will become minus, and your payments are going to 5,22,000. So this 1,88,000 minus 5,22,000 gives you 3,34,000. 3,34,000. This is also negative. So now what you understand here is there are two negatives. So what do we know? What do we have to understand? This is what is called overdraft facility required in the month of November. This will be the overdraft facility required in the month of December. So when you go and sit with the banker, you will explain the banker that for October we are having positive cash balance, no problem. But for November we need 94,000 rupees, and by December our overdraft facility may go up to 3,34,000 rupees. Is it okay? Because you cannot pay more than what you have unless and until you have an overdraft facility. You cannot pay more than what you have. So if you have to pay more than what you have to take an overdraft facility from the bank. How can you pay 5,06,000 out of 4,12,000? So that means banker has given that 94,000 to us in order to make the payments. Is it okay? That is about your 19th question. So this is question number 19. 20th is also very much similar. We'll try to do it. You look at question number 20, the same lines. Look at this. Question number 20 says, Sundaram company wishes to arrange overdraft facility with its banker during April, May, June. So for a particular year, when it will be manufacturing mostly for stocks. Prepare a cash budget for the above period from the following data, indicating the extent of bank facility the company will require at the end of each month. So sales are given to you from February onwards till June, purchases and wages. 50% of the credit sales are realized in the month following the credit sales and the remaining sales in the second month. Creditors are paid in the month following the purchases. Cash at bank on 1st April is 25,000 estimated. So it's very, very similar to what we have done. Won't take much time. 20th question. So I'm preparing a cash budget. And once to be prepared is, we look at the question. It is for January, sorry, April to June. April, May, June. So we go with opening balance. That is given in the question. Opening balance estimated is 25,000. That is given. Then second one is receipts. Now, since you have understood the concept of this receipt, I'm directly trying to do it in the cash budget itself. So I'm talking about collections. 50% of 1 month old and another 50% of 2 months old sales. So for April, I will go 1 month old. For April, 1 month old is March. March sales are 1,92,000. So when you look at, let me get my calculator. Where is the calculator? Yes, it's here. So if you take the April 1 month old means, I'll go for March. March sales are 1,92,000. Half of that is 96,000. So March sales, half 96,000 you'll receive in April and another half you'll receive in May. Then April sales 1,08,000, half of it is 54,000. So that I will receive half in May and another half in June. May sales 1,74,000, half of it is 87,000. 87,000 I'll receive here. Another 87,000 I'll be receiving July. What about April 2 months old? April 2 months old means I'll go back to February, March, April. So February sales are 1,80,000. 1,80,000 half is 90. So February is half 90 you'll receive in March, another half you'll receive in April. If you're getting confused like this, you can do it in the same lines as I told you for 19th problem. You do this in the working notes and then get the total and write it here. Okay, that is about receipts. Then talking about payments. Payments may, we are talking about creditors. Creditors are paid 1 month late. So it is 1 month old purchases. 1 month old purchases. So from April, I look for March purchases, 1,44,000. For May, I look for April purchases, 2,43,000. And for June, I look for May purchases, 2,46,000. Okay. Then talking about wages, he didn't say anything about wages. So what do we assume when nothing is said? He's making it in the same month. Same month. So for April, I'll see April wages 11,000. For May, I'll see May wages 10,000. For June, I'll see June wages, that is 15,000. That's all about the question. So if you look at the totals, it is 25,000 plus 96,000 plus 90,000. That comes to 2,11,000. And 2,11,000. And this one is coming to 1,55,000. So 2,11,000 minus 1,55,000 gives me 56,000. So 56,000 is the closing balance. As you all know, closing balance is A plus B minus C. A plus B minus C gives you D. Alright. So this 56,000 comes here as the opening balance for May. Again, take the total. It is 56,000, 54,000, and 96,000. Total is 2,06,000. And here it is 2,53,000. So 2,53,000. If you deduct, you get minus 47,000. So this is overdraft facility. When you get negative figure, it is nothing but an overdraft facility which you will be taking from your banker. So this minus 47,000 goes here as negative figure. So this will be 87,000 plus 54,000. So total becomes 94,000 because that amount gets deducted there. And the payments are 2,61,000. So 94, 2,61,000 if you remove, you get minus 1,67,000. This is your negative, that means this is your overdraft facility. So you will go and talk to the banker saying that, sir, we require an overdraft facility. We need an overdraft facility in the month of May for 47,000, and our overdraft may go up to rupees 1,67,000 in the month of June. This is all what we have in question number 20, the cash budget. All right, guys. So that is what we have in cash budget. That is question number 20 we finished. So I'll stop it here. Thank you all.